Imagine this. Wall Street's most coveted trillion-dollar stock pick isn't the AI chip giant dominating headlines and social media feeds. It's not the company everyone assumes is leading the charge in artificial intelligence, nor the one whose name is synonymous with the latest tech boom. In fact, the real story is far more intriguing, and potentially more rewarding for savvy investors willing to look beyond the obvious. The true opportunity, according to some of the sharpest minds on Wall Street, lies with a company that's not just riding the AI wave, but has been quietly building a foundation of innovation, resilience, and global reach for decades. This is a business that's weathered market cycles, adapted to technological revolutions, and consistently delivered value to shareholders. In a market obsessed with chasing the next big thing, the smartest money often flows to companies with a proven track record. Those that have demonstrated they can not only survive, but thrive, no matter how the landscape shifts. While one company may be building the engines that power the AI revolution, another is constructing the entire vehicle, integrating cutting-edge technology, software, and services into a seamless ecosystem. This company isn't just selling products, it's selling solutions to millions of enterprise customers who are already deeply invested in its platform, making it nearly impossible for competitors to break in. This is a story of strategic monetization, market penetration, and relentless innovation that extends far beyond a single product or trend. It's about a company that understands how to turn technological advances into real-world profits, leveraging its scale and expertise to stay ahead of the curve. In this video, I'll break down the numbers, examine the company's forward-thinking strategy, and look at why top analysts are rating it as Wall Street's premier pick. We'll explore the financials, the growth drivers, and the competitive advantages that make this stock stand out in a crowded field. So get ready. We're about to reveal the single best trillion-dollar stock to buy right now, and why it could be the cornerstone of your portfolio for years to come. Before we dive in, let's briefly talk about the foundation of successful investing. The Value Stocks Investing Master Course is a step-by-step guide that demystifies the stock market and teaches you to find great companies trading at a discount. You'll learn to read financial statements, calculate intrinsic value, and spot competitive advantages, without jargon or complexity. Take control of your financial future now. Check out the special discount link in the description. Now back to the main event. When investors look for the next big winner among trillion-dollar tech giants, the obvious choice might seem like Nvidia or Apple. But right now, the stock with the most compelling upside potential isn't Nvidia. It's Microsoft, ticker symbol MSFT. Microsoft has quietly positioned itself as the backbone of the digital economy, and Wall Street is taking notice in a big way. As of September 2025, top analysts project a 26% upside for Microsoft, with a median price target of $630 per share. That's a significant jump for a company already valued at over $3 trillion, and it signals just how much confidence the market has in Microsoft's future growth. This isn't just a short-term bet. Analysts see Microsoft as a long-term compounder, capable of delivering steady returns year after year. What's driving this optimism? It's not hype or speculation, it's Microsoft's powerful, diversified business model. The company has built a vast empire that spans everything from productivity software and cloud computing to gaming and artificial intelligence. Microsoft's ability to monetize AI across its entire suite of products from Office 365 to Azure gives it a unique edge that few competitors can match. By seamlessly integrating cutting-edge technologies like generative AI and machine learning into essential products, Microsoft has created a strategic advantage that's nearly impossible for rivals to replicate. Its products are deeply embedded in the daily workflows of businesses and consumers alike, making Microsoft indispensable in the modern digital landscape. As the world's largest enterprise software vendor, Microsoft dominates with its Office suite, Teams, and Dynamics platforms. It also runs Azure, the world's second-largest public cloud, which is growing rapidly and capturing market share from competitors. Microsoft's sticky ecosystem locks in millions of customers, ensuring recurring revenue and high switching costs. When Microsoft rolls out new AI-powered features, they're instantly available to a massive, global, paying audience. This scale gives Microsoft a huge advantage in testing, adoption, and monetization, accelerating its growth even further. Wall Street sees Microsoft as the rare tech giant that offers both stability and explosive growth. The company's successful pivot from legacy desktop software to cloud and AI leadership has transformed its business and unlocked new revenue streams. Investors are betting that Microsoft's innovation engine will keep driving results for years to come. The 26% upside isn't just about numbers, it reflects deep confidence in CEO Satya Nadella's vision and Microsoft's flawless execution. Under Nadella's leadership, Microsoft has consistently outperformed expectations, delivered strong earnings, and stayed ahead of major tech trends. In the next chapter, we'll break down the financials and strategy that make Microsoft Wall Street's top pick. and show why this tech titan's best days may still be ahead. Microsoft's latest earnings show why Wall Street is so bullish. In June 2025, revenue hit $76.40 billion, up 18% year-over-year, beating expectations across cloud, software, and advertising. Net income soared 24%, with EPS at $3.65, outpacing even the most optimistic forecasts. This isn't just growth, it's accelerating momentum, with strategic AI investments already driving highly profitable returns. An 18% revenue jump at this scale is breathtaking, underscoring Microsoft's dominance in massive expanding markets. The company's aggressive push into cloud and early AI partnerships are now paying off in a big way. These results give investors confidence that Microsoft's growth is a powerful, ongoing trend. Let's look at how Microsoft is turning AI into real revenue. Microsoft's real genius? Monetizing generative AI right now. While many tech giants are still experimenting with artificial intelligence, Microsoft has already found a way to turn it into a powerful business engine. The company's Copilot strategy is more than just a feature update. It's a fundamental shift in how people work, collaborate, and create value using AI. Microsoft 365 Copilot, the AI assistant built into Word, Excel, PowerPoint, and Teams, is being adopted at record speed. Employees across industries are discovering how Copilot can draft emails, summarize meetings, analyze data, and even generate presentations in seconds. This seamless integration into familiar tools means users don't have to learn new software. They simply become more productive with what they already know. The number of Copilot users tripled in early 2025, making it the fastest-growing suite in company history. This explosive growth isn't just a testament to the technology, it's proof that Microsoft has tapped into a real business need. Companies are eager to empower their teams with AI, and Copilot's rapid adoption reflects that demand. By embedding AI into products businesses already use, Microsoft creates a compelling upsell and a high-margin revenue stream. Instead of selling standalone AI tools, Microsoft weaves Copilot into the daily workflow, making it almost indispensable. This strategy not only increases the value of Microsoft 365 subscriptions, but also deepens customer loyalty. Copilot products now boast over 100 million monthly active users. That's a massive user base, and it's still growing. Each new feature and update brings more users into the ecosystem, creating a network effect that strengthens Microsoft's position in the enterprise market. Microsoft is also leveraging AI to boost Azure, capturing market share in AI infrastructure and scaling data centers faster than rivals. As demand for AI-powered applications grows, so does the need for robust cloud infrastructure. Microsoft's investment in Azure ensures it can support both its own AI ambitions and those of its customers. By offering both AI-powered software and the infrastructure to build AI, Microsoft creates a self-reinforcing cycle of growth. Customers who use Copilot are more likely to use Azure and vice versa. This synergy amplifies Microsoft's reach and influence across the tech landscape. This two-pronged approach, AI and software and infrastructure, sets Microsoft apart. Few companies can match this combination of scale, integration, and innovation. It's a strategy that not only drives revenue but also positions Microsoft as a leader in the next era of computing. Wall Street sees a direct line from AI hype to Microsoft's bottom line. Investors are betting that Microsoft's Copilot strategy will continue to deliver strong financial results, making the company a central player in the global AI race. Azure, Microsoft's cloud platform, is a cornerstone of its growth. Despite fierce competition and a slight dip in market share, CIO surveys still rank Azure as the cloud provider most likely to gain share over the next 3 years. Azure's hybrid cloud capabilities and deep integration with Microsoft's other products make it the natural choice for enterprises. Its partnership with OpenAI and massive AI data center investments have made Azure a go-to for AI development. Even as the cloud wars intensify, Azure's strategic advantages and enterprise relationships keep it ahead. Microsoft's leadership in AI infrastructure is fueling its next phase of growth. Let's examine if the stock's valuation matches its potential. Microsoft trades at 37 times trailing earnings, a premium to its 3-year average of 33. Its PEG ratio is above 3, higher than peers like Alphabet, Amazon, and Nvidia, suggesting a growth-adjusted premium. Some analysts worry the high price leaves little room for error if growth slows or AI monetization disappoints. High expectations are a double-edged sword. They reflect potential, but set a high bar. However, others believe earnings forecasts are too conservative. If Copilot and AI initiatives keep outperforming, actual growth could exceed projections, making today's valuation look reasonable in hindsight. For patient investors, starting a small position and adding on dips could be a smart move. Valuation is a concern, but the growth story is hard to ignore. Now let's zoom out to the long-term picture. Microsoft sits at the intersection of two unstoppable trends: enterprise software and cloud services. Both markets are projected to grow at double-digit rates through 2030, providing a powerful tailwind. Microsoft is the global leader in enterprise software, set to capture a disproportionate share as businesses digitize and adopt AI. The cloud market is expected to grow 20% annually, with Azure as a primary beneficiary. Explosive demand for AI infrastructure only accelerates this growth. Microsoft's recent 18% revenue growth isn't a fluke, it's a reflection of its alignment with these trends. Microsoft stands tall with a market capitalization of $3.75 trillion, reinforcing its place as one of the most dominant forces in technology. The company delivers earnings per share of $13.70, supported by a price-to-earnings ratio of 36.87. In 2024, Microsoft generated $281.72 billion in revenue and secured $101.83 billion in net income, a reflection of its strength across cloud computing, enterprise software, and AI-driven services. The stock is currently priced at $505.12, which is about 5.6% below its fair value estimate of $533.42, suggesting upside potential while maintaining stability as a cornerstone of the tech sector. The long-term outlook. Microsoft is a compounding machine with a clear path to continued leadership. We've explored the numbers, strategy, and market dynamics that make Microsoft Wall Street's top trillion-dollar pick. But smart investing is about building a framework to consistently find great businesses at fair prices. If you're serious about long-term wealth, invest in your education. Check out the Value Stocks Investing Master Course. For deeper analysis and exclusive research, join our premium Patreon community. Link in the description. Now I want to hear from you. Which trillion-dollar stock do you think has the best growth prospects over the next 5 years and why? Share your thoughts in the comments. I read every one, and the best discussions happen right here. If you found this valuable, hit like, comment, and subscribe for more insights. Until next time, invest wisely and stay informed.